All right. Matt, the mortgage guy here. In today's video, we're going to flash back about a year where I put out a video talking about when mortgage rates go up. Not if, but when, what it would look like 3%, 4%, and 5%. And I go back to this not to brag and say I told you so, but to show you the impact of the different interest rates and what they do to payment and or purchasing power. So in today's video, we're going to have to add a column. I'm going to have to add 6%. Because we've already got there. And in this video later on, you'll have to check it out. I actually talked about if we could get to 5% by Q1 of 2022, what I thought it would do to the housing market. So I'm going to talk today about what I'm seeing already, what I think we're going to see in the future, what these interest rate increases are going to mean to the consumers and the housing market. All right, just some guy on YouTube, happen to do a lot of mortgages, happen to talk to consumers and real estate agents every day. I'm going to bring you my feedback, my opinion on what I'm hearing, feeling, and seeing in the real estate market with mortgage, hopefully help you out on your home buying journey. So let's jump into it. I made this video almost exactly a year ago. I think April 18th, 2021 was the date. So let's just listen in to just the beginning part of it, and then I'll jump into current rates, what's going on with rates, what kind of impact it's going to have on the market, so on and so forth. On what happens when mortgage rates go up. And I say when mortgage rates go up because I'm a firm believer, I talked about it on a few podcasts this morning that I appeared on, rates are inevitably going to go up. You pump a bunch of money in the economy, you got stimulus galore, yes, you're going to see future inflation, you're going to see rates increase. The Fed stops buying billions in mortgage-backed securities. A lot of things point to mortgage rates going up in the future. So I want to talk about not only how does it affect you, the consumer, in your payment, how does it affect how much you qualify for, how it might affect the housing market. So in this video, I'm going to get into it. I've got a spreadsheet in front of me so I can show you real-world numbers. Because I know that when I've done YouTube live and things like that, people want to see the real world numbers, right? So I'll dig into this and show you 3%, 4%, 5%, not only how it's going to affect your payment, but then we'll plug in some different numbers to see if you qualify up to a certain amount. All right, so not enough people watched this video, only got 668 views. Like, comment, subscribe, share this video so it gets out to more people because I think it's important. Like I talked about here, real world numbers are what people want to see. And so with that in mind, I didn't plug in 20% down payment. I didn't plug in, $1 million purchase price. I plugged in, which for Sacramento, at least where I'm at, is a first time home buyer price, 500,000 and 5% down is something that a lot of first time buyers are coming with. I'm sure you might have 10%, you might have 20%. So in that case, your payment's going to be lower, or you might be buying at a higher purchase price. But nonetheless, you're going to get to see, as I scroll through here, what effect it has on payment as we go from 3% to 4% to 5%, ultimately maybe 6%, right? So as most of us know, rates are now at about 5%, a little bit lower for the best qualified clients, lower if you want to pay points, which I don't recommend. In most cases, but nonetheless, 1 year ago, you buy at 500,000, you put 5% down, you could get 3% or sub 3% and have an all-in payment, principal and interest, taxes, insurance, mortgage insurance, $26.94. Rates go up to 4%, that payment goes up almost $300 to $29.59, and then 5%. You fast forward today, you're putting down 5% on a $500,000 purchase. That's a big mortgage payment. That's a big mortgage payment, $3,241. And we don't know where rates are headed in the short term. I'm talking the next 3 to 6 months. I think it's pretty unanimous that rates are headed up. A little bit longer outlook, if we have some recessionary pressures, there's a lot of smart money saying that rates are going to come back down, right? But do they go up to 5.5% and then drop to 4? Do they go up to 5.75 and then drop down to 4.25? Nobody really knows, right? The best thing you can do as a consumer is educate yourself, look at these numbers, find out what it is, the mortgage payment's going to be, what you qualify for at different prices, and go from there. So between 5% and 6%, as you can see, you've got we can call it about 10% increase in your payment from $32.41 to $35.39. Something I did in that prior video, which I think is something that's beneficial to folks, is to look at, let's say $32.40 is your max, right? You can't qualify for any more than that. Like that's your debt to income max. You got to keep the payment under that, or that's your payment comfort level, $32.41. Instead of, going up $300 in payment, which you can't do because you don't qualify or you don't want to, you might have to look in another area, right? You might have to say, okay, what's available in another area at $470,000? Less than that, $460,000. Then we're about in the same range, right? So $40,000 less, 8% less purchasing power if rates go from 5 to 6. Something to think about, something to consider, something to at least know. This stuff has a real life effect on that. And there was a lot of people that unfortunately we spoke to, we qualified. They were looking at a certain price point with a certain interest rate. They were comfortable. They were ready. It was either, their timing, or they weren't, out there with enough urgency submitting offers. These things happened faster than most of us expected, right? I'm not saying that you have to act now if you want to buy a house and that rates are going to go from 5 to 7 as fast as they went from 3 to 5. I'm just saying be aware of this stuff, right? One thing I want to mention, and I'll do it here, I don't want to make this video too long. If anybody wants this spreadsheet, feel free to reach out to us, team@mtmg.com. We'll shoot you this scenarios based on different rates. You can change this, right? You can change this to $300,000. And maybe in your market, you're looking at the $300,000 range. It's going to auto-populate all these numbers, where currently with 5% down, you're $19.45. If it goes to 6%, you're $21.23. It's going to be similar in that it's about a 10% increase in your payment when it goes from 5% to 6%. But what I do want to mention, like I talked about in the last video, I can tell you with absolute certainty, when interest rates go up, it quells demand. Whether real estate agents are talking about it, whether mortgage people are talking about it, I promise you, there's 100 pre-approved and motivated buyers that might go down to 80, that might go down to 70, that might go down to 60 as interest rates go up. Homes become less affordable. They're either unwilling or unable to buy. Sometimes it's qualifying things, sometimes it's a willing thing and they don't want to buy. That is going to come down. So the 15, 20, 25% home price appreciation will slow down. I promise you that. 15 offers will slow down to 3%. This is going to be a video that goes up that I'm not going to take down. So in a year from now, if we see 30% price increases and I've got egg on my face, so be it. I think Q2 and Q3 of 2022, we're going to see the real estate market flatten out a bit. We can't get all the way to 0% price appreciation, I think, in 2022, but I think we can get sub 10%, which may sound like it's still appreciating rapidly if we get 7 or 8%, but it's a whole lot better than 18, right? So as we can't fix the supply problem all in this year, right? We're just short on supply. That's not going to fix itself. But if we can take demand from way the heck up here to here, we might be in a more balanced market where you're only competing against 3 offers. That's my prediction. I'm sticking to it. It's going to be here on YouTube for me to come back to next year and either say, hey, you knew what you were talking about, or you got no idea. So hopefully this was helpful. Do with this what you will. Go back and check out this video. I might change the title because I don't know, for whatever reason, people weren't digging it. What if mortgage rates go up? I could have said something different there. But anyhow, if we can help you in any way, we're more than happy to. Go to greatmortgagebroker.com, fill out the form. We'll be in touch with you within 24 hours. I'm happy to help give you great advice, get you pre-approved, give you some scenarios like this to show you exactly what you're in for. If it makes sense for you to buy and you're looking to do that in the next 3 to 6 months, please reach out to me and the team. We'd be happy to help. Greatmortgagebroker.com. And until next time, we gonna see.